Hi everyone, this is Rob Roy and welcome to this edition of the Elliott Wave Options U.S. Market Update. Last week we had a little fun with my childhood hero, which is Spider-Man. I'd seen the new Spider-Man movie on my birthday, etc. And we talked about the fact that I felt that that had a feeling, Spidey sense, if you will, that the market would get enough good news out of the G20 meeting to break to the upside, and it did happen. Well, I have to tell you that my Spidey sense is tingling again, and it's because of what's happened in the charts since we talked last week. So let's take a look at the charts, and I'll give you an idea of what I'm talking about. I think we're about to see something happen again, but this time not so sure on the direction. So let's take a look. All right, when we take a look at the chart of the S&P, you can see we're still in the Elliott Wave 5 move to the upside. Everything looks good there. If we bring up the DMI looks very strong. And you can see that the ADX is curling to the upside, and we've got the good separation between the two directional indicators, the positive directional indicator in green and the negative directional indicator in red. Everything looks really strong there for the market to continue its move to the upside. And it may continue its move to the upside. But what I want to show you is when we take off the Elliott Wave indicator, we haven't reached our target yet, right? That's 310 on the SPY is the target, but we are approaching the lower level of the projection box. But when we take that off, look what's happened with the market itself. It's consolidating. Not into one of the traditional Elliott Wave triangles that I usually talk about, which are the ascending, descending, or symmetrical triangles. In this case, it's a pennant pattern. It's still a consolidation pattern. I don't look at these as much because I think the triangles are much better. There's also flag patterns, which people look at. So flags, pennants, and triangles tend to be the three patterns that break out. I just tend to focus on the triangle patterns, but you have to respect the fact that it is a pennant pattern. You can see where it got its name. It looks like a baseball pennant. But the possibility here is that it could break out. And if we go back, we look at the Elliott Wave pattern, we've got good confirmation with the DMI, and we may very well break out in a volatile move to the upside and hit that Wave 5 target. But you just have to respect, when you have a breakout pattern, you have to respect the possibility of a break either direction. And so all I'm saying is that the pattern still looks good, but we have to give a little bit of respect here for the possibility of a downside breakout if the pattern needs to change its direction. So it's just a little bit of a cause for caution. You know, stay with the plan, but also be aware we're moving into earnings season, and as the earnings come out, they start this week. And so as the earnings come out this week, that could be the catalyst that causes this breakout. The other thing that I wanted to share with you is I have a search that finds the triangle patterns. It finds consolidation patterns. Now it finds consolidation patterns, and then I find the triangles within the consolidation patterns. Let me be very clear about that. And when I ran the search today, it returned 64 candidates. Now, it's not unusual for it to return a lot of candidates, but most of the time they're sideways consolidations, and then I go through and apply the Elliott Wave rules and find the corrective triangles. However, what was unusual is how many really well-formed triangles there were. So even though the fact that there's been times before having a lot of results is not that unusual. That's a high number, but it's not that unusual. But what is unusual is how many really good breakout patterns there are, rather than just a bunch of them being sideways and you have to find the gems out of there. There's a lot of really good patterns, so something's getting ready to happen. When I see that, that's that Spidey sense that I was telling you is tingling. Something's getting ready to happen. The market's getting ready to make a breakout move. Now, which direction? That remains to be seen. But something's getting ready to happen. I can't tell you it's going to happen tomorrow, but I do think that this earnings season could very well be the catalyst. So over the next couple of weeks, we could see a pretty sizable move in the market. So we'll see how it plays out. What I wanted to do is update you with the charts that we showed last week. Looked at the Russell, and here's what happened since then. Absolutely nothing. Nothing's happened. It's gone dead sideways for the entire week. We still have the Elliott Wave pattern. We still have the 50% corrective level in the Wave 4, but the ETF itself, mirroring the Russell, has gone nowhere. But then we look at the SMH, which is the semiconductors. And remember, we talked last week about how a lot of people use either the semiconductors or the Russell as leading indicators for the general market. A lot of people believe that for the general market to make a good bullish move, it needs those pieces of the market to go along with it, the semiconductors and the Russell, the small caps. Well, the semiconductors had a great week. Big vertical move to the upside here. But when we take a look behind the scenes, there's the money flow, which is clearly not positive. And then we take a look at the DMI, and it shows you that, hey, strength is building. So there's a little bit of a divergence there between those two indicators. So what's going on? Is the money going to move in to it and then we power forward? Which of these two forces is going to win? Because the strength, as evidenced by the DMI, is not going to be able to continue without some positive money flow coming into the semiconductors. It's just not going to work. It's not strong enough to survive without it. So we'll see how that plays out. But what's going to happen with the Russell? Is the Russell going to join in with the semiconductors and it's going to break and make that defined upward move? Now, all these things, all these answers are going to appear within the next week or two, I think, and we could very well have a great alignment, have a surprising earnings season to the upside, and things break higher. But there's some questions and there's some things that just aren't lining up perfectly right now, enough to cause caution and certainly some interest to see how things trade out. Looking at the VIX, we talked about this as well. The fact that we had this consolidating triangle, nice symmetrical triangle within the VIX. Some pundits were saying that they just didn't feel like there was enough room for a downside breakout, and they'd been calling for a market correction sooner, but we felt differently, that there was good potential for a downside breakout of the VIX. And now we're down here. We've broken to the downside, and we're down at an area of support here around 12, which has been support for quite a while. But again, there is evidence that we can go even lower if the market wants to. So if the market wants to have an upside breakout because of this earnings season, we go up and hit all those targets, the Russell and the semiconductors get in line, all these things line up and everything's perfect. And the market's rarely perfect, but that could happen. But I just wanted to show you and remind you that there is room for the VIX to break even further lower if it wanted to. But we broke out, we're at support here, so you could certainly make a case for the VIX being at support and bouncing higher. So there's caution here, and the strangles. With our subscribers, we encourage people to get in both of our portfolios. One's directional based and one is non-directional based, even though it's based on strangles. So that means that we aren't picking a direction, but we are expecting a directional breakout. And it's good insurance for a portfolio because with the strangles, every single position has a long put in it. So if you do get an unusual breakout to the downside, well, you have protection. So it's built-in protection, not just in that single strategy, the volatility strategy, but for a portfolio as a whole. And I think that strangle strategy, especially with the results that I got from my search today, is showing us that we are building for some breakouts, a number of breakouts in the market and possibly the market itself. It's going to be fun to watch over the next week or two, and I'll be back to report it to you. Take care, everybody.